So how much is that entire portfolio worth?
Our current portfolio value is right around $250 million.
Maybe 250 million. Where did you start at? Like, were you born rich? You went into all these apartments. What did you see that was crazy?
Here or just in general?
So how much is this building, this complex worth?
Right now we have it under contract for 10.5.
What will it be worth once it's done?
We estimate that it's going to be about 18.5, 18.8 million.
That's like 8.5 million in equity or increased value?
Increased value, correct.
How many units does 11 million buy?
This is 164 units. In 164 units, we're going to be in at about 66,000 a door. There is some equity that comes out of that. So it's not like, you know, hey, you just made $8 million out of nothing, right? We're going to invest about $4 million into the property. That $4 million will increase that. It's a forced equity play to increase the value, and it'll get us to the point where...
Hold on, what's a forced equity play? Because I heard of forced depreciation. So when they say forced depreciation, that means they came in, did some renovation and pushed the rent.
Absolutely.
So that created more value?
Correct. Depending on the asset, but appreciation happens naturally, right, over time. Like, it just goes along with inflation. Forced appreciation or forced equity, we're actually taking action that increase the value of the property, increase the NOI, which is how these properties are valued in the first place.
Oh, so now natural appreciation, I like to call it, that's like fine wine that ages in time. Like, you literally put the wine on the shelf, but with these properties, you just sit on it, maintain it, and it increases in value.
Correct.
Like fine wine.
Yeah.
Why buy 164 units?
Well, this project, it really lines up with our mission. There's a lot of tenants here that are living in some pretty rough and deplorable conditions. And for us, we have the expertise, we have the team where we can fix that. So there's also an opportunity to make profit doing so, which is like a win-win-win-win, you know what I mean?
So how many units do you own? Like, how big is your portfolio?
We've got, right now we're at 1,335 units in Cincinnati, greater Cincinnati area, with this additional 350 total units in this portfolio that we're adding to that. So
how much is that entire portfolio worth?
Our current portfolio value is right around $250 million.
Maybe 250 million.
Yeah.
How'd you do that?
It's one of those, I mean, it's the same thing. You force equity, right? We buy assets that are in need of something, right? It might be a management play. It needs capital infusion. This one needs all of that.
How does somebody afford a $10 million building?
Well, in this case, we partner with private investors who invest with us, invest alongside us on these.
Oh, so you didn't use all your own money?
Correct.
Oh,
yeah.
So you're using that OPM strategy?
Yeah, OPM, whether it's the bank or private investors, we leverage that and they leverage our skill set.
No way. So you get leveraging your skill set, like putting a tool belt together, you put OPM and debt, and that's how you get into a $10 million deal.
Absolutely.
The people watching this, like, why would you tell them to buy multifamily or a large apartment?
Well, I guess it depends, right? It depends on what you're looking for. Taking on a project like this, I actually would not recommend as the first project. This is not where you want to start.
Where would you?
We started with single families. We started with single families and then got a small multifamily and then kind of progressed. There's a couple different routes to benefit from real estate, in my opinion. You can passively invest and let somebody else have all this fun.
So you let somebody else deal with the 3 T's, tenants, toilets, and trash?
Yeah, that's an option. The other is to kind of do it how we did it, which, 15 years ago, we started this process. We figured out some things along the way, and now we can leverage that once again.
Yeah. So you're the buyer and speculator. Like, what's your responsibility? Why do they hire you? What do you do?
So with this team, we come in and just kind of get a feel for expectations on a property. Obviously, we're getting a current look at conditions and where the big picture needs to fit together with the puzzle of a property like this.
So what do you mean by that? Like the big picture, like are you saying like what kind of work needs to be done, or do you actually put a budget together for them?
So we don't put a dollar sign on it just because that's a fluid thing, and especially with the past few years with prices on windows and roofing and things like that, more referring out to those specialists as needed. Like for instance, here we have a lot of foundation issues, so we'll get somebody in to get a look at that, get prices for Matt, and he's got a good team to do that as well.
Now when you say foundation issues, what does that mean?
A lot of water here. And
we got water intrusion?
Yeah.
It's not just the rain on our head, our shiny heads?
Yeah, and if you look around, we've got gutter issues that are also the culprit to water intrusion into these lower levels. So it'll take a lot here, but this is the team to do it.
Why doesn't somebody go out and do their own inspection?
You certainly can. It can be more time consuming than it's worth. And for us, we have a good relationship where they'll bring us in. We kind of know the expectation. We've seen their finished product, so we know what that's going to look like as well. You know, it can also be tremendously expensive to bring a roofer in, an electrician in. So what we like to say is it's kind of like seeing your family doctor, where we're going to get a good overall look at everything and then call in the surgeons as needed.
Oh, okay,
if that makes sense.
That's good. You're checking out the electrical, the plumbing, water intrusion, roofing.
Right.
You're one-stop shop.
Right.
That gives them an overlay of what this thing will look like so they can put a blueprint together.
Exactly. And you know, people will ask us, well, what are you looking for? And we really don't know. I mean, we're just in there to see what's wrong, and every day is different. And so we don't really have
expectations. Okay, so let's get down to it, though.
Yeah.
You went into all these apartments. What did you see that was crazy?
Here or just in general?
In here.
What did you see? They're fighting a lot of water. They're fighting some bugs. Are
the tenants clean?
No.
Oh,
no.
Lord Jesus.
These are newer roofs and they're shot. There's a lot going on here. There are a few units that they've slapped some new floors in.
In your opinion, and we're not holding it to you,
yeah.
You know, but what do you think something like this will cost to renovate?
Oh gosh, scale here. I don't want to throw a number out because I haven't looked at any numbers on this.
Give me a per unit. Just throw it out here. We got to do due diligence.
Gotcha. I could easily see spending 20 to 25 a unit right out of the gate.
25 unit, and that's what, 130 units?
160.
160.
Yeah.
So 20 a unit, like that's $3.2 million, almost $3.3 million in renovation. We need to ask Mac why the hell somebody want to invest that much money in here? Like, what kind of return? That's crazy. Anything we should be looking at that you saw that was kind of out of pocket or needed a lot of work?
You'll have to see through it, but I think even just the exteriors, you can see the potential here. I mean, it has a cool feel to it. You've got courtyards. There are little covered porticos between buildings where you could hang out. I mean, it has a great vibe. It just needs new life breathed in.
Like, what's the first thing you look for in inspecting an apartment? Like, I like to say I want to go into the guts of it and analyze everything. What do you look for when you first go in?
Well, to kind of hit you with the Uno reverse here, we honestly get a good feel from the tenants that are there.
Oh, really?
If we go in and we're getting screamed at all day, it's not even necessarily about what's wrong with the place, but has the management team been attentive? Are they taking care of people? Are the issues known issues that they're ignoring? That type of an eye on it can really help us get a feel for how well it's been maintained, or if they're just throwing Band-Aids on Band-Aids. So we're looking for big ticket items too. You know, roofs, especially over a place with this many buildings, that's gonna add up really fast. So, you know, bottom line.
Well, thanks for sharing the info, brother. Appreciate you.
Absolutely. Good talking to you.
Why would they still have knobs and tubes and whatever for breakers? Like, don't you need to update this?
Yeah, so there is a lot actually from inspections on this property. That specifically is, you know, they're operational. We haven't found one that didn't work.
People still use these things?
Yes,
like,
they're not.
What are these called again?
Not suggested. I mean, that is your actual fuse type.
Oh, those are
glass fuses.
So, like, they use breaker nowadays,
yes,
right?
Exactly. So, which in some of the units on this property, what we've seen so far is we're probably at about a 75% replacement already done. And then these, obviously, this unit being a burnout unit that we're in currently, this is something. So this has an open IBI, which is an inspection.
What do you mean open IBI?
So it has been submitted to have an inspection done on this unit. So it has been submitted to the county, more or less saying that.
I don't know what that is.
So your IBI is your inspection bureau.
Oh, for the inspection. Oh, inspection bureau. Okay.
Yeah. So your IBI is your electrical inspection division, more or less.
So will you upgrade this?
Yeah.
now?
So that'll get a different panel. Most likely, it's going to end up getting like a color hammer or an Eaton 100 amp panel.
Man, this panel older than rap music.
This unit itself is kind of a prime example.
Well, I do need a bed.
Of a lot of the issues around here. So
were people living in this?
They relatively recently, yes.
Oh my God.
They weren't living in this per se condition, but this did happen. And it's probably one of the large reasons why these tenants no longer are at this property.
Oh, poor baby, literally.
Yes,
poor
exactly.
Baby.
And that's a common occurrence, and that's what drives us, that specifically. Children,
that baby had to
home.
sleep on the bed and eat. That's crazy.
Now, like you see on the floors.
Yeah, so these were new floors, right?
Yeah, so this had some sort of, I mean, I would say a severe water leak at some given point in time due to the type of ceilings and material of this. It takes a lot of water to make that collapse.
Yeah, I mean, this was like a brand new floor, and they just let it go.
So this was kind of the, this was more of an updated unit.
Yeah.
This was one of their.
And now mold is sitting in.
Yeah, as you can tell, like there was quite a bit of water in these.
So this is in receivership. Now we're in asset management.
As far as I know, that would be the terminology for it. This one right here is like a 2-bed.
Oh wow, that's the bathroom.
Full bath, but
that sounds like, oh, is that the gutter?
it's got an AC unit sitting outside. Yeah,
unit. Okay.
Gutters are a common issue on this property.
Yeah, that shouldn't be running down like that.
No, they've roughly replaced like 50%, but the 50% that has been done, it looks
I remember,
totally incorrect.
I remember last time
This had a sewer backup.
Oh wow, so this is what it looks like for sewer backup. That's why you go door to door to door. Like you'll say, hey, show me a couple units or show me one unit.
Yeah.
And when our initial inspection, we didn't see any of this.
No, so when we initially walked this, of course, they're gonna show us units that, that are close to market ready. I think we roughly walked 81 units that are currently vacant.
This now?
This would have been as of last week. So
we're all the whole portfolio?
No, that's just property alone.
This was 81 units vacant?
Roughly 80 some units.
Oh wow.
In a rough estimate of what we walked, there may be, I'd say 15 to 20 that are in this state, that are in this kind of condition. Yeah. So,
we got a flashlight in the truck, man. What the hell? Oh, they got a new tub.
The nicest thing in there is that cardboard.
Oh,
don't mess it up.
So they put these cardboards over the tubs to save the tub. That's what I like, man. A little prep work. Yeah, man. I hate when we go into bathrooms and they rehabbing and they don't put that cardboard over it, like because they sanding, they doing towel work. They got mortar and it all goes into the drain and clogs it up. And next thing you know, your P-trap is all jammed up and clogged up, and everybody go, I don't know what happened. Because you ain't put cardboard over it. How did you get started? Like, where did you start at? Like, were you born rich?
Not at all, not at all. No, but I came up, my family actually was involved in real estate since I was a kid. My parents have owned rentals since I was a little kid. My parents actually got up to about 27 units, right?
Oh,
they had full-time jobs and were still running that and had 5 kids.
So they had the W-2, 27 units?
Yeah.
And 5 kids?
And 5 kids.
Did you get any attention?
I did. I still need it, Mike, as a matter of fact. I need a couch and we're gonna talk about all that. Now, what ended up happening for us is they started selling properties right after they got to 27 units. They hit critical mass where they couldn't manage it all.
Yeah, I get it. So where do you think the cutoff point when you start needing really help? Is it 10 units or 20 units?
It depends on the person, your aptitude, how organized you are, what kind of systems you have in place, right? If it's a system, everything's a systems game.
Okay.
It's always systems. What I wanted to figure out is how do you go from 27 units to 2,700 units? So I ended up.
So you were ambitious.
Yeah, a little bit.
How old were you when you said I want to go to 2,700 units?
31 years old. That was 15 years ago.
So you wasn't really rich, but 27 units had to do a little something to the family income.
Yeah, my parents were doing okay. They were, like I said, they were stressed out because they were doing everything themselves.
Oh, so they had the DIY system.
Exactly.
Doing it yourself.
Absolutely, absolutely. And then I ended up deciding to work for another firm and worked for not much money or compensation, but learned a lot.
Weren't you like a bartender at one time?
I actually went back to school. I went back to school and got a job in a restaurant during that time. I took a course on entrepreneurship because I didn't know that there was such a thing.
Now, how old were you when you did that?
30 years old.
Okay, so
it was a part of my process, yeah.
So you went from to the adulthood and still was getting education?
Yeah, I literally quit the job I had. I had a pretty decent middle management job in a marketing firm. Quit that job, went back to school to learn entrepreneurship because I knew I wanted to own my own business and didn't know any other way to do it. Started there, ended up working for another company doing exactly what I wanted to do. Quit school quickly thereafter because I was learning more there.
So you were doing job trying to learn about entrepreneurship, but you sped it up to meet somebody that could kind of introduce you to your future self? Is that what
That's a way to put it. That's a way to put it, yeah.
And so you worked under them because if I remember, these guys were doing mortgages and buying properties.
Yeah. These guys, it was a cool experience actually. I got to work with guys that were doing what they were basically converting from doing 50 flips a year to buying and holding apartments. And I wanted to understand that process on how you scale it. These guys were comfortable scaling businesses. They'd done it in the past. So I basically attached myself to them, learned as much as I possibly could, made them a bunch of money, made me not that much money. But I learned a lot.
Pippin ain't easy.
I learned a lot.
These are kind of, what do we call these? Iron cabinets? Steel.
Yep.
Why keep these? Why not replace them? Like, in my opinion, like, they're good, solid cabinets. These things last forever. But aesthetically, I'm like, change this joint.
Yeah, that's what we're doing. We're actually going to gut it.
We're going to gut it.
Initially,
Now, when you say gut, what do you mean gut? Because everybody's got the definition. Because when you say gut, that means rip all the drywall down to the studs versus some people like gut meaning we're just going to take out the cabinets.
In this instance, we are talking about the cabinets. So the cabinets in this, now there are units here where we really are going down to the studs. You will experience, there's some of those that will be true, a full gut job. In this case though, we did think for the rents that are available in this market and for the clientele we're trying to attract, this isn't good enough. Right, so these steel cabinets are solid. They'll be here for 100 years.
Let's talk about the difference of that. Like, this is kind of a transforming neighborhood, meaning it was like a C, but it's true. Yes, but now it's going into a B neighborhood. B stands for both cash flow and appreciation. C just means cash flow. So what kind of rents are you expecting to get here?
Yeah, we think it's mostly 2 bedrooms. There are 1s and 3s, but our average rent here will be about $1,450.
And what are the rents now?
They're averaging right around $950.
900, and then you push it to 1,400, almost a $500 increase.
Yep.
So if you can push the rent by $500, that means 500 times 164 units. It's about 82,000. And then times 12, that's a potential 900, almost just shy of $1 million, 984,000 additional income divided by a 7 cap. And that's like $14 million just by pushing the rents by $500.
Now, you have equity that was spent to do that. And there's things that come out of that, right?
Okay.
And we're using, in our projections, we'll use a much more conservative cap rate in case the market turns in the next 5 years.
Now, describe cap rate. Like, a lot of people don't understand. What is that? How would you define it?
Yeah, capitalization rate is just a way of measuring the return on an investment, right? So if you were to buy a project, the simplest way is if you buy a project all cash, and how fast will my money come back to me if there's no debt involved? So if you buy a place for $1 million, and this is exactly how I explain it to my boys, right? If you buy a place for $1 million and $100,000 a year in cash flow comes out of it, that's a 10% capitalization rate or 10% cap rate. The rate of return of your money without leverage being involved. The reason that's valuable and important is it allows you to look at alternative investments and see which one's the more robust. The cap rate that you apply to a property is determined by the age of the asset, the desirability of the area, the rents, and things of that nature will determine how high or how low of a cap rate something is trading at. So in our market right now, C assets are trading at 6 to 7 caps. Concurrent, like right this second, that's what's happening. But we don't use those cap rates to determine what we'll pay for a project because the market could change. If rates 4 years from now are at 8%, then the cap rate's gonna be 9, 10. So that deal still has to work in that environment. So we put a lot of cushion on our project so that if cap rates stay compressed where they currently are and they're low as they are, it's, we're talking about, instead of an $18 million sale, we're talking a $22 million sale. Like, it changes the whole, there's another $4 million just swinging in there. For us, we're gonna look at it as, hey, things are gonna go bad. We make that assumption. And for us going bad.
So when you analyze the deal, because a lot of people are always like, oh, we're gonna make this so much money. Well, I just heard you say, I'm looking at the worst case scenario. I'm preparing for the downside.
Absolutely.
Why would you do that?
And so you want to go from broke to millions, not from millions to broke. Is the way I would think of it. That's kind of what the focus is.
I think that's the best way to do it.
Yeah, so if our worst case scenario, there's $4 million created in equity, that's able to be harvested, that's our worst case scenario. That makes it a project worth doing.
So what advice would you give to somebody just starting off?
I guess kind of what I did in a way. I've always sought out mentors. I'm always looking for somebody who's already made the mistake, who's already lost the money, quite frankly.
Really?
Yeah,
that's the one that lost the money.
Oh yeah.
Not going to the guy that's been up there.
Nope. This is the way I look at it. And this is a little contrarian, but I work for some really intelligent, smart guys, and we still compete with those guys to this day, right? and it's a small world. And I'm much more interested in what you did wrong than what you did right. The right I could probably figure out. It's the thing that tripped you up, especially the more successful that you've been. You know, it's the thing that tripped you up I want to know about. I want to study that.
You know, I was funny, we were talking about the other day, like the pattern for success. Fail, 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 success.
Right.
Fail, fail, success, success, success.
Yeah.
Fail,
right.
Success.
Right.
Like, you want to get in that rhythm. Like, I never thought I would want to get into a rhythm like that.
Yeah, that's the trick. And like I said, when you get to the right mentor, the thing that trips them up is going to be something that trips up 100% of people, right? They're not going to miss anything obvious, right? It's the little nuanced things that they'll, like, how'd you lose $1 million? I want to know that story.
So now you said your portfolio is upwards of $200 million.
Mm-hmm.
And you still have a mentor?
Absolutely. There's mentors for every level, right? My mentors now have 10,000 units plus, right? But it just, it just changes.
How do you do 10,000?
Yeah, it's just.
And what have they done for you to elevate you? The one thing you took away from them?
Oh, goodness.
I know you took a lot.
Yeah, the one thing, I can't even do the one thing because it's that transformative, right? Every part of your business, even every part of your personal life even, right? I have mentors in that space as well. Like how do I be the best dad that I can be? How can I be the best father I can be?
So you don't have to just get a business coach, you can get a life coach. You can surround, so proximity is the key to unlock not just financial freedom, but life freedom.
I absolutely. I paid to be in mastermind groups personally. I'm currently in a mastermind group that's $50,000 a year. But at the end of the day, it's one of those things where it's like, you pay to be in certain rooms, but you need to get in that room, right? And it pays for itself. I think our return on, if I haven't already 10x my return on that.
You got in a mentorship that literally shared a system, or did they tell you about this book? You did one of those popular things, EOS.
It was one of the first things that our current mentor that I'm dealing with right now and working with, now become friends with. And one of the first things he told us about was the Entrepreneur Operating System, or EOS. And it's a blueprint for how to build a company.
Now, the funny thing about that, how you do one thing is how you do everything. And basically it's project management in a way, but literally you're setting goals for the year and you break them down into quarters. And you will end up doing more in 90 days than most people do in a lifetime. And EOS wrote a book about it, what is called Rocket.
The first one's called Traction. And there's a whole bunch of books after that. Rocket Fuel is what you just
Rocket
touched
Fuel,
on.
because once you put a system like that, it creates rocket fuel for you. Like literally you're taking off. But you don't have to just do it in business. You can do that in life. Like I've implemented that in my life, and in 90 days, we took 4 or 5 students and other investors. They went from 1 or 2 units to over 100 units and $5 million in additional wealth in just 90 days.
That's awesome.
But it's all about a system.
Absolutely.
Share with us one of your biggest hurdles. Like, how did you jump, or were you even able to jump over that hurdle? How were you able to come back from that? Like, what was your biggest project or biggest
hurdle? I think, probably my biggest hurdle was my initial hurdle was the lack of knowledge. I didn't know I knew what I wanted to do and had no idea how to do it. So I overcame that hurdle by basically humbling myself, gave up a pretty decent salary, started working in a restaurant, going to school at night and working all day and I worked literally 7 days a week for almost 4 years straight.
How many hours a day were you putting?
I was going at least 10 hours a day, at least. But I was doing 2 jobs. So I actually got to the point where it was 3. So when I started working for the company that was mentoring me, I'm serious. When I started working for the company that really was like a paid mentorship for me, and you know these guys. When I started working for them, at that time, that's actually when we met.
You said paid?
It was like a paid mentorship because they paid us a little bit of money.
Okay, yeah, that's
right. But we learned a lot of information, right? So we learned a lot. That's like I said, that's about the time I met you. Yeah.
The first your first deal kind of from there was a 10 or a 20 unit?
It was 11 unit. Our first deal was 11 unit that we did together as partners. And then, but yeah, these guys, and you, like I said, you know these guys. I remember the first time I met you, actually, you came into their office. We were working in this little tiny box of an office. It was 4 men in this office, right? So there's 2 offices, and then me and Steve are in this little, actually, something like this room, like about the size of this room. His desk against that wall, my desk against that wall. And from that little nucleus, the 4 of us were running 5 different companies, from a mortgage brokerage, a title company, a property management company. We had the construction arm that was doing 50 flips a year, and then we were also doing the buy and hold real estate. So in that little space, I learned a ton. Didn't make a lot of money from it. Once again, I'll reemphasize that it was probably illegal the way they paid us or didn't pay us, but learned a ton. Was able to dabble in everything from finance to real estate, and it was like the perfect little nucleus to prepare me for what we were going to do next, which was venture real estate company.
Hey, look, man, this is my man, Matt Henderson from Venture Community, or Venture Capital, runs all of that. Hey, guys, God bless you, God keep you. Just remember, you're just one big deal away.